Good morning, good afternoon, or good evening to our global audience. Welcome to Executive Talks brought to you by AC Capital Market. I'm Glenn, and today we have David Morgan to talk to us about precious metals. Thanks so much for coming, David.
Glenn, it's good to see you again. It's been a while.
It's been a while, indeed. But before we dive into the questions, I'd like to take a minute to introduce David. David is a widely recognized analyst in the precious metals industry and consults for hedge funds, high net worth investors, mining companies, depositories, and bullion dealers. He is the founder and publisher of the Morgan Report, a world-class publication designed to build and secure wealth. Mr. Morgan is also the author of the Silver Manifesto and a featured speaker at investment conferences worldwide. He frequently appears on CNBC, Fox Business, Yahoo Finance, MSNBC, and BNN. Now, David, we all know that back in 2024, you predicted platinum prices would rise due to supply challenges out of South Africa. And since then, platinum price has gone from $950 to more than $1,250 per ounce. Amazing predictions. So we have three questions for you today. The first one is pretty obvious. Silver prices have rallied more than 40% since mid 24 and had successfully broken out of the ascending triangle pattern. Through your lens, can you tell us what's driving this?
Yeah, let's feel in the move. Well, silver's finally doing what we've expected it to do, and that's playing catch up to gold, which has broken out far earlier in a much more substantive way. There's really 4 points to go through here. One is institutional repositioning, with gold at 3,300 or so in that territory. Some large funds, not many, but some are reallocating into silver, which trades at a very fair price relative to gold based on the gold silver ratio. Second one is supply stress. Silver mining output is flat to declining on a global basis. If you look at silver mining activity on a global basis over the last 5 to 7 years, it's pretty flat. In some years, it's down a little bit, a percent or two here or there. In Mexico, the top producer has seen disruptions from both energy problems, shortages here and there, sporadic, and regulation, which is up in the air. I know what the truth is. I give it to my premium members. Most of it is more of a red herring. However, the truth of the matter as it stands now, meaning it could change with political, power in the future, is to get a new mine permitted up and going in Mexico is going to be much more difficult in the future than it is now. At the same time, physical inventories on the COMEX and LBA were depleting rapidly, but restocking of the silver on the COMEX has actually been substantial the last month or so. And then exploding industrial demand, which is key to kind of put a base floor on silver, which I would say these days is probably $30 the ounce US. The industrial demand from solar panels, EVs, anything electrical or electronic, really has put a big demand on the silver market. If you go back 2 decades or 25 years, total demand for industry was about 35% of the market. Today, you could say it's 65% of the market. So it's almost doubled. In that same time frame, 25 years, Glenn, the amount of silver mined back 25 years ago is 550 million ounces a year. Today, in the last 5 to 7 years, it's been 850 million ounces. So you might do that calculation in your head, not the exact number, but the point being is we're mining 300 million more ounces per year the last several years, but yet it's 65% of the market. So it's a substantial amount. And lastly, and this is probably the most important for how markets move these days, and that's technically. The technical breakout, once silver cleared the $30 level, that gave a psychological support. But 35 is really the technical level where the algorithms will come into play and start flashing green lights to hedge fund managers, pension funds, family offices, floor traders, anybody, and we don't have floor traders these days, but let's say futures traders on the institutional level, all those will be saying that the momentum is in favor of silver above 35. It's been staying there, although it's tested it once or twice, and that's adding fuel. So that means more institutional participation in the silver market on a technical basis. And this setup took quite a while for it to happen, but we're finally seeing it. And I think the future is quite bright for silver. So, in short, silver's price rally isn't just a spike, it's a re rating of the metals in both the monetary hedging and modern industry.
Wonderful. Thank you, David. That's very solid analysis right there. 4 points. Our traders should take on board David's analysis there. Another trend, David, question number two, is that we have noticed that gold has not been as bullish as 2024, despite the geopolitical tensions and the recent developments. And therefore, the divergence between silver and the gold is starting to show. What's causing the divergence?
Well, the divergence where gold is, really doing well and now it's consolidated and silver starting to catch up reflects a rotation I mentioned before. Basically, gold is a more establishment metal. I mean, even though you don't hear about it often on the mainstream financial channels, they push stocks more than anything else. But you do hear mention of gold. You'll have a talking head about gold every now and again. I haven't been on TV. I'd say the one thing about my bio, and thank you for the nice bio before we started having our conversation, but frequently seen it's not true anymore. When silver really did its number between 2000 and 2011, I was asked on the mainstream financial channels fairly often. That has not been the case, excuse me, recently. But coming back to your point, gold led the way as central bank sovereign wealth funds and the BRICS all seek to de-dollarize. And the banks love gold. They really don't use silver as a monetary asset. So you had what happened with the the Russian blocking of their $300 billion. Other sovereign nations. So wait a minute, if they can do it to Russians, maybe they'll do it to us. That never gets talked about on the mainstream press anywhere that I'm aware of, but I'll say it. And so these banks were, stockpiling gold and buying gold at a faster rate than they have in a long time for the year 2023, 2024. And now that's spilling into 2025. Silver lagged because it lacks the monetary prestige, but it's still catching up now. And the gold silver ratio, which seldom gets above 80, got to over 100. And now the ratio is starting to come down from that. So historically, silver outperforms gold late in the cycle. And that's where we're headed. We're headed to, I would say, 2, maybe 3 years, in my estimation, where we're going to see gold reach its ultimate peak for a while. Whether that's 5,000 US, I don't know. If it's 10, I don't know. I don't rule out any number. But at that point, wherever gold really takes off again and starts going parabolic, which again, I think is a couple of years out, you'll see silver probably outperform gold. And I would expect to see the gold silver ratio at that time get to at least 30 to 1, 40 to 1, something like that, which means from today's perspective, we would see silver outperform gold about 2 to 1. So if you put $10,000 in the gold market and it got to 20,000, if you put the same 10,000 into silver, it'd be 40,000. But it doesn't mean you should give up on gold. Gold is a lot more stable, less volatile, mainstream investment to preserve your wealth, whereas silver has all those features, but it's not noted as such in the mainstream media. So again, 3 things. Banks were buying gold, not silver. Silver lagged because it just doesn't have the monetary prestige that gold has. And to wrap up, the gold silver ratio is starting to favor silver right now.
Thank you. That makes a lot of sense. We'll keep our eyes on the gold to silver ratio uh, for for um for guidance for now. But like you said, it silver outperforms gold in the late cycle, so still plenty of opportunities to look in there. The last question is that we've been talking about precious metals so much. Are there any good ways to diversify traditional assets and increase exposure to silver or any precious metals?
Absolutely, and that's where I come in. Most investors are drastically underweighted precious metals, especially silver. But the time to prepare is before silver hits $50 again, not after. So there's several ways to get exposure intelligently. The first one that I've advocated from day one is physical silver. This is your core position. This is coins, bars, or secure storage you control in a segregated account. I can help your viewers or listeners with that. They have to send me a email through our main website, support@themorganreport.com, and I will answer them personally. But you can't print it. It doesn't rely on any counterparty risk. It does everything that gold does, except historically it's very cheap relative even to gold. Second is selected silver equities. And this is where we track the best of the best and run on silver producers from top tier, mid tier, and juniors. The Morgan Report has a focus on value, jurisdictional safety, and leverage to higher prices. We do a lot more than silver. We look at gold, of course, and we have a copper, lithium, the battery metals, rare earths, I didn't say it already. So we go to the spectrum. We have a couple of uranium companies that are doing very well. But right now, the place to be is pretty much in the precious metals and copper. Then we also feature streaming and royalty companies. If you want exposure without the risk of mine development, these firms provide a way to benefit from silver without really having as near as much risk as you have operational risk in a mine. And this is what we favored pretty much from day one. In fact, my favorite silver company is up 20 times, 20-fold. And it's a big
Impressive.
company, which we say put big money in the top tier. So when you buy the Morgan Report premium service, the first thing you do is you get a PDF and a little video that talks about how to allocate your monies into the Morgan Report, how to use the Morgan Report. So 20 times is like silver going from five times 20 is $100 silver. Well, silver is about one third that price. So people that say, oh, you always do better by buying the metal itself, don't bother with the mining shares, don't know what they're talking about. Well, let me reframe that. They know what they're talking about on aggregate. On average, if you just are an average stock picker in this, you will probably do about the same as if you bought in bullion. So why not buy bullion? It's safer than buying a mining company. But if you know how to pick these stocks and you know how royalty companies work, you can do far, far better than the actual metals price. And I just proved it. And again, that's big money. So it's like, oh, I'm betting, 500 bucks on a junior that might go up 10 bagger and 5,000 bucks. Now this is, we have investors that probably put, 100 grand, 200 grand, 250. Some of the pension funds probably a lot more than that into this company, and they're up from the beginning 20-fold. Now, I'm not saying everybody got a 20 bagger out of it, but that's where we started it, and that's what it's at now, which is like buying silver at $5. I mean, you could have bought silver at $5 and be holding it, 35, 7 times on your money, or you could have bought this particular company and you're up at 20 times your money. Anyway, I said enough about that. The last one is alternative funds and strategies. There's ETFs, but most investors don't realize it will actually give you direct exposure to the physical supply demand fundamentals. And we walk you through the risk of these alternatives. We feature the ETFs in the report every now and again, but really we do better in the equities themselves. And this is what we do at the Morgan Report. We've helped thousands of investors not just buy silver, but understand how to use it in a portfolio and hedge on a wealth building strategy. So we've done it for 25 years on the internet, and I've been involved in the commodity sector, particularly precious metals, for over 40.
Thank you so much, David. We do have a lot more questions, but you are a very busy man, so we'll have to save them for next time. In the meantime, our viewers, if you want to find out more about David's latest forecasts, please feel free to visit www.themorganreport.com. And thank you again for joining us today, David.
My pleasure, Glenn. Thanks for having me.
Thanks for watching Executive Talks brought to you by AC Capital Market. We'll see you again next time.